Welcome back to the Digital Asset Report. Bitcoin is starting the week around $81,000 with Ethereum trading near $2,300. Geopolitical uncertainty, a firmer dollar, and even risk appetite are still keeping traders cautious. At the same time, spot Bitcoin ETFs have continued to draw fresh capital with more than $1 billion of inflows reported over the past week. Institutional demand is still strong. The lead story today is in Washington. The Senate Banking Committee is set to take up the Clarity Act on May 14th, giving the crypto market structure bill its clearest path this year toward a committee vote. The bill is designed to draw cleaner lines between the SEC and CFTC and to clarify which tokens are securities, which are commodities, and how exchanges should be supervised. Senator also Brooke discussed the bill on Bloomberg recently. Take a listen.
Senator, I'm curious. Look, our audience has really basic questions when it comes to clarity. Yeah. Is it going to pass, and is it going to happen this year? Because when you talk about it, you make it sound like there's still a pretty long road.
You know what? I think it can pass. I really do. I think we've come a long way. I hope so.
It's a full calendar.
We've had a lot of work. We've put a lot of work into this. We've been working tirelessly for months. What it will mean is we're going to have some compromise. I think everyone will walk away from the Clarity table just a little unhappy, both the banks and the crypto industry.
What do you compromise on, though, potentially?
You know what? We've compromised and said we want the innovation to grow, but we don't want to create bank-like products without the protections of a bank. You cannot pretend to be a bank-like product without the protections.
So is stablecoin yield the biggest holdup?
That was a big holdup.
We're still there, though, right?
Well, I think we have. I think we've resolved the yield issue.
We did.
We have resolved the yield issue in a way that I think prevents evasion of the laws. Again, allows the innovation to grow. But we put some barriers in place that will allow both to be a little unhappy. But I think it's a way forward.
The key fight here is still stablecoin yields. Banks want strict limits on yield-like features, arguing that stablecoin rewards could pull deposits out of the banking system. Crypto firms say rewards tied to payments or active use are not the same as interest on idle balances. The current compromise would ban rewards on idle stablecoin holdings while still allowing incentives for active transactions. That's the kind of detail that decides whether stablecoins become regulated payment infrastructure or remain stuck in political limbo. And that debate is landing just as Circle is showing how large this market has become. The USDC issuer reported $694 million in quarterly revenue and reserve income, up 20% from a year earlier. USDC circulation rose 28% to $77 billion. Circle also raised $222 million in a token pre-sale for ARK, its stablecoin-based blockchain network, with investors including A16Z and BlackRock. Stablecoins are steadily becoming the infrastructure for digital finance. The corporate payments world is moving in the same direction. Corpay, an S&P 500 corporate payments company, announced a partnership with BVNK to add stablecoin wallets and settlement capabilities for global customers. This is the real adoption story. Businesses want faster cross-border payments, 24-hour settlement, and digital dollar access inside normal treasury workflows. Corporate balance sheets are still active too. After last week's earnings call, Strategy CEO Phong Le appeared on CNBC to explain the company's pivot to potentially sell Bitcoin. Take a listen.
The biggest change that's happened to the company, and I would argue to Bitcoin and perhaps the financial markets in the last year, has been the advent of digital credit, which is Stretch. We've raised $8.5 billion in 10 months. And with that, we look at optionality, and we look at our strategy, and we say, now, let's look at the Bitcoin and see if it can provide us value from time to sell it. And ultimately, I believe in math over ideology. And at the point where selling Bitcoin versus selling equity to pay a dividend is better for our Bitcoin per share and for our common shareholders, we'll do it.
Stretch is a perpetual preferred stock with an 11.5% yield that's paid monthly. So is what you're saying that you're selling some of your Bitcoin holdings in order to pay this yield?
We will sell our Bitcoin to pay the yield where it's accretive to our shareholders, and that's defined as accretive to Bitcoin per share, right? And the times when it's accretive are when the book value of our company is trading below the price, or the price is trading below the book value, right? Or MNAV is below right now 1.22.
And that's just for Stretch in particular?
That's just for Stretch, but we'll also look at selling Bitcoin, for example, to capture tax gains, right? Defer tax gains or tax losses in this particular case also.
On the miner side, Iron continues to show how the sector is changing. The former Bitcoin miner secured a 5-year, $3.4 billion AI cloud contract with NVIDIA tied to manage GPU services for NVIDIA's internal AI and research workloads. For miners with power, land, and data center expertise, the next cycle is more about AI infrastructure than it is Bitcoin hash rate. On the global regulatory front, Bank of England Governor Andrew Bailey warned that stablecoins could become a point of tension between the United States and international regulators. His concern is convertibility. If dollar-backed stablecoins become major cross-border payment rails, users need confidence they can redeem them for real dollars during stress, not just trade them through crypto exchanges. That is why the debate is bigger than crypto policy. Stablecoins are moving into the same category as payment systems, bank deposits, and money markets. And central banks are starting to treat stablecoins that way. Prices may be moving sideways, but crypto rails are moving forward. Lawmakers are trying to define the market, stablecoin issuers are scaling, corporate payment companies are integrating digital dollars, and infrastructure firms are finding new business models. The market is still volatile, but digital assets are becoming harder to separate from the traditional financial system. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.